Making $1,000 monthly from options trading isn't gambling. It's a systematic income strategy that thousands of investors use to supplement their salaries. Forget the complex options theories you've seen elsewhere. I'm about to show you the exact step-by-step approach that generates consistent monthly income using just basic covered calls and cash-secured puts. Looking at real data from successful options traders, we'll break down the precise platform setup, stock selection criteria, and risk management rules that turn small portfolios into monthly income machines. This isn't about hitting home runs. It's about consistent base hits that compound into serious wealth over time. The wealth creation opportunity here is massive because most people overcomplicate options while missing the fundamental truth. Selling premium systematically beats buying premium over time. You can start building this income stream today with the right knowledge and platform setup. Breaking down the mathematics of $1,000 monthly options income reveals exactly how much capital and which strategies deliver consistent results. With $25,000 in capital, selling covered calls on dividend stocks can generate 4 to 5% monthly returns, which translates to $1,000 to $1,250 monthly income before considering stock appreciation. What this demonstrates about options income is that consistency matters more than home runs. Real trader portfolios show this pattern. The investor who sells 10 covered calls monthly earning $100 each significantly outperforms the trader who occasionally hits $500 winners but has inconsistent income. The behavioral finance insight here explains why most options traders fail. They focus on maximum profit potential rather than sustainable income generation. The market rewards systematic premium sellers while punishing speculative premium buyers over extended periods. Choosing the right options trading platform determines whether your $1,000 monthly goal is achievable or gets destroyed by fees. Tiger Brokers and MooMoo offer competitive options commissions starting at 65 cents per contract with advanced charting and risk management tools essential for systematic income generation. For monthly income strategies, commission structure and margin requirements are critical because small fees compound dramatically over time. A $5 difference per trade becomes $1,800 annually when selling 30 contracts monthly, directly impacting your $1,000 monthly target. What emerges from analyzing successful options income traders is clear platform preference patterns. They choose brokers based on execution quality and research tools rather than just commission costs. The income difference comes from having access to real-time options flow data and advanced order management systems. Implementing covered calls for monthly income involves owning 100 shares of quality stocks and selling call options against those positions. With stocks like Apple or Microsoft, you can collect $200 to $400 monthly premium while maintaining upside participation up to the strike price. Looking at the risk-return mathematics, owning 500 shares of Apple, $175 stock, and selling 5 call options monthly can generate $1,000 to $2,000 in premium income while allowing 5 to 10% upside before shares are called away. The key is selecting stocks you're comfortable owning long-term. The wealth creation strategy that successful covered call traders use focuses on dividend-paying stocks with moderate volatility. This combination provides quarterly dividend income plus monthly option premium, creating multiple income streams that compound over time. Implementing cash-secured puts generates income while building stock positions at discounted prices. By selling puts on stocks you want to own, you collect premium immediately and either keep the premium if stocks stay above the strike or acquire shares below current market price. What the data reveals about cash-secured puts is that they outperform buying stocks directly during volatile markets. Instead of buying Apple at $175, selling a $170 put collects $300 to $500 premium and either provides that income or allows purchasing shares at $170 minus the premium collected. The behavioral finance advantage of cash-secured puts eliminates the timing paralysis that keeps most investors on the sidelines. Rather than waiting for perfect entry points, you get paid to wait while maintaining the discipline to buy quality stocks at predetermined prices. Identifying stocks suitable for consistent options income requires focusing on companies with liquid options markets and predictable business models. Looking at options volume leaders, stocks like Tesla, Amazon, and Nvidia offer high premium income but require larger capital bases and higher risk tolerance. What distinguishes sustainable income stocks from volatile trading vehicles involves analyzing implied volatility patterns and earnings calendars. Companies with 20 to 30% implied volatility provide attractive premium without the extreme moves that can disrupt income strategies. The practical approach successful options traders use combines blue-chip stability with sufficient volatility for premium generation. Screen for stocks with average daily options volume above 1,000 contracts. Then research whether their business models support consistent performance over multiple market cycles. Managing risk in options income strategies requires predetermined rules for position sizing, strike selection, and exit criteria. Never risk more than 20% of portfolio value in any single position, and always maintain cash reserves for margin requirements and opportunity deployment. What emerges from analyzing failed options traders is consistent pattern recognition. They either concentrated too heavily in single positions or failed to close losing trades according to predetermined rules. Successful income traders close positions at 50% profit or 20 days to expiration, whichever comes first. The wealth preservation advantage of systematic risk management protects monthly income consistency during volatile periods. Having predetermined rules removes emotion from position management while maintaining the discipline necessary for long-term income generation. Implementing the wheel strategy combines cash-secured puts and covered calls into a systematic income machine that works in any market environment. Start by selling puts on stocks you want to own, collect premium monthly, and either keep the income or acquire shares to sell calls against. What this reveals about sustainable options income is that flexibility beats directional betting consistently. The wheel strategy profits from time decay and volatility premium regardless of market direction, making it ideal for generating consistent monthly income. The strategic approach involves selecting stocks that you're comfortable holding during temporary declines while generating premium income throughout the process. This method transforms volatility from a risk into an income opportunity through systematic premium collection. Managing options positions around earnings announcements creates both opportunities and risks for monthly income generation. Implied volatility typically increases before earnings, offering higher premium collection, but post-earnings volatility can create significant position movement. Looking at how successful income traders handle earnings reveals conservative approaches. Either close positions before announcements or select stocks with predictable earnings patterns. The goal is consistent income, not speculation on earnings surprises. The behavioral finance insight here addresses the biggest destroyer of consistent income: the temptation to collect higher premium before earnings while ignoring the associated risks. Having predetermined earnings management rules protects monthly income consistency. Maximizing after-tax income from option strategies requires understanding the tax implications of different approaches. Short-term options profits are taxed as ordinary income, while qualified covered calls on stocks held longer than 1 year can qualify for long-term capital gains treatment. What emerges from analyzing tax-efficient option strategies is that holding periods and strike selection significantly impact after-tax returns. Selling calls more than 30 days to expiration on stocks held longer than 1 year optimizes tax treatment while maintaining income generation. The wealth creation optimization involves structuring option strategies within tax-advantaged accounts when possible. Roth IRA options trading eliminates tax consequences entirely, making it ideal for systematic income generation strategies. Understanding how to adapt options income strategies across different market environments ensures consistent $1,000 monthly generation regardless of broader market conditions. During bull markets, focus on covered calls with higher strike prices. During bear markets, emphasize cash-secured puts for share accumulation. What successful long-term options traders understand is that strategy flexibility matters more than perfect market timing. The ability to adjust strike prices, expiration dates, and underlying selection based on market conditions maintains income consistency through various cycles. The practical wealth creation approach involves maintaining core positions while adapting tactics to current market volatility and trend. This systematic flexibility allows capturing consistent income while avoiding the emotional decisions that destroy trading accounts. Developing a systematic approach for scaling options income as capital grows creates a clear pathway from $1,000 monthly to significantly higher income levels. Starting with 2 to 3 positions, gradually adding positions as experience and capital increase maintains manageable complexity while growing income potential. Looking at how successful traders scaled their approaches reveals common progression patterns. They maintained conservative position sizing while gradually increasing the number of positions rather than increasing risk per position. This approach compounds income while managing downside risk. The wealth creation framework involves setting specific scaling milestones. At $50,000 capital, maintain 5 to 7 positions. At $100,000, expand to 10 to 12 positions. This systematic approach ensures income growth without overwhelming management capacity or risk tolerance. Implementing more sophisticated option strategies like iron condors and butterfly spreads can increase monthly income potential for experienced traders with larger capital bases. These strategies profit from sideways market movement and time decay while requiring more complex management. What distinguishes advanced strategies from basic covered calls involves understanding multi-leg risk management and margin requirements. Iron condors can generate $500 to $1,500 monthly income per position, but require active monitoring and adjustment during volatile periods. The practical progression involves mastering basic strategies before adding complexity. Most successful options income traders generate their core income from simple strategies while using advanced techniques for enhanced returns on a smaller portion of their portfolio. Avoiding the classic mistakes that destroy options income protects your $1,000 monthly goal while building long-term wealth. The biggest destroyer of options income is emotional decision-making. Holding losing positions too long hoping for recovery, or closing winning positions too early from fear. What the data reveals about failed options traders shows consistent patterns. Over-leveraging through excessive margin use, concentrating in single positions, and failing to maintain adequate cash reserves for position management. Each mistake can be eliminated through systematic approaches and predetermined rules. The behavioral finance solution involves automation wherever possible. Automated profit-taking removes greed from decision-making. Automated stop losses remove hope from losing positions, and predetermined position sizing rules remove fear from opportunity deployment. Your pathway to $1,000 monthly options income is clear and achievable through systematic application of proven strategies. Start with covered calls on dividend-paying stocks, implement cash-secured puts for share acquisition, and gradually build a diversified portfolio of income-generating positions. The income multiplication opportunity ahead of you is enormous because you're starting with strategies that compound over time. Every month you delay costs income opportunities, but every position you establish today begins working immediately toward your financial independence. Subscribe to Premium Logic Lab for more advanced option strategies that scale beyond $1,000 monthly. Which strategy resonates most with your situation? Covered calls on existing positions or cash-secured puts for share building? Comment below with your options income goal, and remember, consistent base hits beat occasional home runs in the income game.